Hey, welcome back to another Grand Strand real estate market update. I'm Brendon Payne with Century 21, the Harrelson Group. And as always, wanting to bring you the most up-to-date metrics and stats from the market so that you can be informed and make the best decisions for you and your real estate holdings. As usual, I'm going to go through a couple different categories. I want to look at the residential homes and what happened in the month of July, and also look at the condos. And if you remember from past videos, I will always be sharing residential resales and condo resales. I keep all the new construction stuff out of there. It muddies the waters in just the way that sometimes things are listed and the amount of time they're pending. It skews the numbers. So this is always going to be residential resale and condo resale information, which is what you as a property owner should want to know about. Okay, so let's jump right in. Residential new listings in the month of July. So new listings continued their downward trend that we've had. Of course, we peaked out in the month of March. That was the highest amount of new residential listings that we had, a little bit earlier than we've had in past. Usually it's like May or June, and this year was in March, and we've been coming down a little bit each month with new listings. So that's good from an inventory standpoint if you're a property owner, because prices are always a product of supply and demand. Month supply, we had leveled off in June. So the month of supply was kind of in line for several months after we peaked with new listings. There was about the same amount of sales happening as the new listing. So it kind of leveled off. In June, the month supply dropped a little bit, which means, if you look back, new listings dropped and months of supply dropped. That means we had to have had to seen a nice increase in the amount of contracts. And we did. In the month of July, pending sales, which had been flat for several months, actually bumped up. So that's good news from the overall market standpoint. Now, historically, we're still low. We have more month supply now than we've had over the last 3 or 4 years. And so we want to keep chipping away with that. And that'll be interesting to see how the next couple of months goes. Now, in terms of new closings, remember closings, you almost know what the new closings are going to be about 30 to 60 days ahead of time if you're watching the new pendings. The pendings are that leading indicator of where are the closed sales going to be. So of course, closed sales, which had been fairly steady for the last few months, I would anticipate we should see a little bit of bump in August and September because we had that nice increase in July new pendings. All right. So moving over to the condo market, new listings actually had been flat for a few months. They also peaked out in March. So the number one month or the most listings we had in the condo market was in March, flattened out for several months. And then in July, they picked back up a little bit. So we had an uptick in new listings in condos in July. Why does that happen? Well, if you think about the peak that happens in March, that's sellers that are getting ready to meet the demand of buyers. And in the springtime, the buyers on condos are typically people who are wanting to get them closed, get them on a rental market. Our condo market's dominated by short-term rentals along the oceanfront, golf courses, things like that. So new listings hit in the spring, being ready for that buyer demand of people who want to buy them to rent them, and also people that want to buy them for second homes because that's when they want to come down here, spring, summer, early fall. Okay. So no surprise, March was the peak, and then we leveled off. And then in July, we saw that uptick, most likely from sellers who are saying, you know what, I probably have collected the majority of the rental income for this property for this season. Let's get it on the market if I'm not planning on owning it long term. Month supply has also leveled out a little bit in condos, which is good news. Luckily, it's not continuing to go up, but we're still at very low percentages of the condos that are under contract. We have hovered most of this year between about 10 to maybe 11.5% of the condos that are listed on the MLS for the oceanfront are under contract. So that is significantly less than we've had in a long time. So there still is a little bit of imbalance between the supply and demand right now for the oceanfront condos. There's still things selling, but very price dependent. Pending sales. Pending sales, another piece of good news. ticked up in July to the highest amount that we've had of any month in 2025. Now, part of that, or a big portion of that, the reason that happened is because with that imbalance in supply and demand, more supply, less demand, sellers that are wanting to sell have had to adjust their price. There's been downward pressure on pricing most of the year on oceanfront condos. And so now the buyers have said, okay, I'm seeing some good properties out there at values that make sense to me. And they jumped in the market, and that's where that uptick in new pendings is coming from. So while the pendings is a great thing, the reason that caused it is that continued downward pressure on the prices just because of the inventory and the supply that's available. Now, closed sales, there was in June, there was a little bit of a dip in the new closings. And I would anticipate with those new pendings in the condo market in July that we'll see an uptick in the closings in August. Hopefully in September, it'll be really interesting to see what the pendings along the oceanfront and in condos in general do in August, because that'll give an indicator of what are the next couple of months going to look like. Because normally, seasonally, when you get into that fourth quarter, then we typically have that seasonal dip in the amount of new pendings and new closings on the condos. Okay. So, other topic I want to share with you is around interest rates. And I know that is a topic of just about anything real estate related. Driving to the office this morning, I heard a quote that we were at the lowest 30-year fixed rate, average fixed rate that we've seen this year at 5.53%. Now, depending on what you're reading, what you're looking at, who you're listening to, you could find different numbers all around that. But the fact is, the feeling is that rates are closer to getting better than they have been for at least a few years. Our rates jumped up in the beginning of the second quarter of 2022. And then we've had this challenge, this imbalance in supply and demand growing from that. If we can get some trend where the rate's going down, and even just give us some duration where it's not bouncing back and forth and there's that uncertainty, then there will likely be an increase in the activity. The buyers will jump back in the market as we get closer to that 6%. One of the things, though, that I hear in conversations all the time is what people believe will happen when rates go down. And I want to share with you just a couple of scenarios that I've seen in the past play out that you may be aware of, because the reality is what happens when rates go down depends on what do you own and what is your goal once you sell the property. In some scenarios, waiting for the rates to go down because that would likely cause more demand for your property, more potential buyers, potentially a stronger price. That can be a great thing if you're moving somewhere where wherever you're buying, there's really no change in prices. It's just kind of a flat market. There's no increase in sales when the rates drop because you would sell at a good time, good demand. You are now able to buy at a lower interest rate, but you don't have to pay more for the property in the other area that you're searching in. That's the scenario where it's a net win all the way around. You sell it a little bit better time because there's more demand. You get your price, or maybe the market starts to turn a little bit in your prices, and you get the benefit of the higher or the lower interest rate because where you're buying isn't affected by the interest rate. But that's so few scenarios that I want to share what typically we're seeing right now, or what we're likely to see in this market if you're a single family home owner or condo owner as your primary residence. And then also on the condo market, if you've got an investment property, maybe you've had it for years or you bought it a couple of years ago and you're trying to figure out what makes sense as it relates to rate changes. If you're in a single family home or a condo, it's your primary residence, you're wanting to maybe move within the area. You bought it at a good time, you've got some good equity in it, and you're going to stay in the area, but you're just going to upsize. Or maybe you're an empty nester and you're thinking, we don't need all this home and we're going to go ahead and downsize. Regardless, when you are selling in the same market, typically that inventory supply and demand is going to be affected when those rates change. So you're in a home right now thinking about maybe we'll upsize. We're waiting till the rates come down. Logical, makes sense, brings more buyers in, and we're able to get the price that we want for our home. The challenge is, though, when you do that and you move across town to another neighborhood, that market's also being affected. And what I anticipate is a lot of times if you're waiting for that rate to drop because it helps you qualify for more, gets you a better payment, the reality is when you're buying in the same market that you sold because you got more demand, you're going to have more competition on the buying side. And we know what happened the last time when we had a lot of competition on the buying side, prices actually went up. Sellers' negotiation power went down. They were holding firm and getting what they wanted. We had multiple offers. You had to compete by not putting inspection clauses and no appraisals and all of that stuff. So in a scenario where somebody is able to get a little bit more because they waited till the interest rates go down, it's very plausible that they could end up paying more if they're competing with so many more buyers on their purchase side. Okay. Every scenario is different. So you really have to look at first what's going on with inventory around the property that I'm considering selling. And then where am I buying and do I expect something different to happen there? Now, on the condo short-term rental investment property, really something to take a look at. I hear people all the time make the comment that, well, when rates start coming down, then the condo market's going to improve significantly because buyers are going to be able to come back in and buy. Here's why I don't anticipate that that's going to have a big impact. Most of the condos, the short-term rentals along the Grand Strand, typically are being bought cash or with significant down payments. Why? Because the majority of condos that are being bought short-term rental along the Grand Strand, people are buying them for the performance. They have to have a certain level of performance, meaning what they make or trying to minimize what they cost on an annual basis. So when you have debt on them, a lot of times they don't make sense, as much sense to a large group of buyers. That's why so many of them are bought cash or with large down payments. When you see the rates drop, it doesn't really impact a large group of buyers that are in that buyer audience for the oceanfront because there's not that many of them buying with heavy debt on them, with trying to get into something for 5% down or 10% down because they have to live there. These are investments. So people are buying them trying to get the performance the best that it can be. So rates could drop and not add a significant amount of buyers to the buyer pool, which then means that you don't see a ton of increase in the amount of new transactions. And our challenge right now along short-term rentals and the oceanfront is typically not because of interest rates. It's the supply and demand that's related to the performance of these condos. And over the last couple of years, the biggest challenge with the performance of the condos has been increased expenses, HOAs, insurance, assessments, and decreased revenue. Now, not decreased revenue from, over the course of 25 years, but decreased revenue from the time where a lot of people bought these. There were a lot of transactions. And second half of 2020, 21, 22, right post COVID, some of the best income numbers that the market had ever seen because there were limited choices for people to go on vacation. Lots of people flocked to the Grand Strand. Rental numbers were some of the highest that we'd ever seen. And now they've kind of pulled back a little bit over the last few years. So you've got increased expenses, you've got some decrease in the revenue that they're bringing in, and that affects the overall performance. So the bottom line is, if you're trying to figure out what to do with your property, what the options are, or you're just trying to see, what, if rates go down, what does this really mean for me as an owner? What could it mean for my values? First, you have to look and see what's happened specifically with my type of property in my area. What's the inventory levels? What's the values today? Is there downward pressure based on the competition? And then more importantly, what's the goal after that? Are you cashing out and just moving into a totally different market? Or are you buying somewhere in this market and it might actually make sense to make that move now when you've got more motivated sellers, more things to choose from on the buying end, and you may actually be able to negotiate a transaction or a price that makes more sense. And then somewhere down the road, if you're taking a mortgage out, you can look at the option of refinancing. So reach out to me if you have any questions. Again, thank you so much for allowing me to be your resource here along the Grand Strand. If I can help you with anything, then I look forward to talking with you very soon. Bye-bye. Hey, don't forget to like and subscribe and reach out to me. Send me a quick message on any of the social platforms. Let me know what topics you want to know about along the Grand Strand or other coastal areas of South Carolina real estate market.